Hi dear traders, the market is getting into a panic as the countdown before the Fed's decision has begun. Traders are sitting on the sidelines speculating on how aggressively the Federal Reserve will raise interest rates. The question is whether the FOMC will increase the funds rate by 75 basis points or venture into a jumbo rate hike by 100 basis points. We will find out about it during the New York trade. This week, a range of major central banks are holding policy meetings. The Bank of Japan will be the first one after the US Fed to announce its policy settings. Japan has also been affected by the worldwide trend of high inflation. The annual rate of Japan's consumer inflation accelerated to 3% in August. However, the monetary authorities are poised to stand pat. The central bank still maintains interest rates in the negative territory. All it can afford is verbal interventions, making comments on the yen's protected weakness that poses threat to economic health. Nevertheless, such verbal interventions arouse no response among market participants. On Thursday, the central bank is expected to put the key policy rate on hold at minus 0.1% and reiterate the same message that proper measures for further monetary easing will be taken if necessary. Notably, the regulator is committed to its ultra-soft policy defying the common global rhetoric. The market response is likely to support the Japanese currency because traders will be still reacting to the Fed's policy update and will be fixing profits on long positions on the US dollar. Traders will be able to keep short positions on the US dollar against the pound sterling, though markets have priced in the Bank of England's rate hike by 50 basis points to 2.25%. The thing is that recent macroeconomic metrics indicate that the British economy is much weaker than the American one. The UK CPI reports reveal that inflation has neither slowed down nor even lifted off. Analysts, including the British Central Bank, warned that consumer prices could surge to 13.3% on year by October, and the economy is already slipping into a prolonged recession that could persist at least for 5 quarters. Investors share the pessimistic mood. As a result, the pound-dollar pair has got stuck at the weakest level in the last 37 years, set for the new historic lows. Trading sentiment will hardly improve on Friday, as market economics will provide a series of PMIs for advanced economies. On Friday, investors will get to know preliminary PMIs for September, which will signal negative trends in all developing economies and economic sectors, namely the manufacturing and the service sector. Investors will be especially sensitive about the data for Germany's economy, the powerhouse of the whole European economy. Business activity of German businesses is dented by the threat of energy crisis in Europe, geopolitical tensions, and a looming global recession. At the end of the trading week, market participants will be able to judge on trends in consumer activity in Canada. On Friday, Canada is due to report on its retail sales for July. Notably, consumer activity is not the key criterion for the Canadian economy, so the news is of secondary importance for market sentiment. Contraction in retail sales will relieve demand for the US dollar for traders speculating on the American-Canadian dollar pair. These events are going to be in the limelight at the end of this trading week. Don't miss our daily news reports to learn about the latest events in financial markets. See you!